Hi, everyone. This is Jason Burak of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. I like to have him on every 3 or 4 months to talk about the Bitcoin market. He was an early Bitcoin investor and Bitcoin business angel investor. He's the host of the Bitcoin Knowledge podcast. I consider him a Renaissance man. I'm not sure what he thinks about himself. He's a lawyer, an accountant, a monetary scientist. He's a follower of the Austrian School of Economics. He also used to run the websites Run to Gold and How to Vanish, and he wrote the book, The Great Credit Contraction. Trace Meyer, thank you for joining me again.
Oh, it's so grateful to be here, Jason. We always have a good chat, so I'm really looking forward to it.
Me too. I learn a lot from these chats. I actually re-listened to the interview, so I'm looking forward to your responses to my questions. So I'm looking at the total percentage of Bitcoin dominance on CoinMarketCap.com, and in February 2017, Bitcoin had over 80% of the dominance of all the cryptocurrencies. It started to go down throughout most of 2017. It got back up to about 60% in November and December of 2017, and it's gone down recently to below 34%. Why do you think this is happening, in your opinion?
Well, one, I don't think that metric is entirely that useful. And one of the reasons is because there might be a lot of total number of units for one of these coins, but there might be a very small float, or there might not be very much liquidity in the order book. There could be a whole lot of reasons why there might be a very large market cap, but if you were to actually try and suck out capital from that asset, it would rapidly collapse it. And XRP is a great example of that. You've got a huge amount of the XRP pre-mined by Ripple Labs. It's locked up. Large amounts of it have been sold to whales. It's locked up with them too. And so the actual amount of float is very small, and yet the prices are set at the edges. And so we see this, whether it's forks that have happened like Bcash and Bitcoin Gold and Bitcoin Diamond and Bitcoin Faith and Bitcoin God and Bitcoin X and Super Bitcoin and Bitcoin World and Bitcore. I mean, these are all forks, which, if we have a lot of Bitcoins that have been lost, which we think we have had with Bitcoin itself, then that's also going to inflate, the market caps of a lot of these forks based on whatever the current trading market price is. But if you were to actually try and sell a significant amount at that market price, the depth is not there in the order book. So, I think it's kind of a very misleading metric to look only at that. You really have to see what's in the depth of the order books for your specific assets.
That's very interesting. And a lot of the Bitcoin exchanges and cryptocurrency exchanges also have rules about the amount of cash you're allowed to withdraw. So I've heard that from other people as well. Do you think then that also this Bitcoin losing its dominance is a lot of it's because of the speculative capital that's come in? We were talking about this before we started recording, the get rich quick crowd, and that's why then they're not buying Bitcoin because it's too expensive for them, so they'd rather put $5,000 or $10,000 or $20,000 on a credit card and try to get rich quick on one of these altcoins.
Well, there's definitely some of that. Everybody loves to chase the rabbit, and people seem to like big numbers also. So like Bitcoin X, I think you get like 10,000 Bitcoin X for every Bitcoin you have in the Bitcoin X fork. And so if you're able to buy Ripples, which are like $1 a piece versus like a $17,000 Bitcoin, so there's definitely some marketing that might be taking advantage of the little bit less mathematically aptitude, like people with mathematical aptitude. But yeah, I mean, like Bitcoin X is a good example. You've got this fork and you've got a market price, but the exchanges where it trades do not allow deposits. So you can only trade the Bitcoin X's that were that were forked and in your account at the time the fork happened, when you had Bitcoins on the exchange. Well, why do you want to keep Bitcoins on these like shady Chinese exchanges? So, I mean, there's never a free lunch, and you have to look at some of this as like, it might be a trap, right, from Admiral Akbar. and so, it's one thing I would be very worried about is not to enter a position you can't exit. And what I mean by that is you don't want to corner the market on something that there's really no demand for, right? Because then you can't sell it. So even though you might have wash traded with yourself on one of the exchanges to to bump that price up. It's not really there if you were to try to reallocate it out of that particular asset into something much more liquid. And it goes along with my great credit contraction thesis. We want to seek assets that are safe and liquid. So we don't want to own very illiquid assets in this current environment. It's just not, I don't think it's a very good investment thesis to own illiquid assets.
Yeah, I agree. And I've heard a lot of complaints from a lot of my friends who trade Bitcoin now and listen to this podcast about a lot of the different cryptocurrency exchanges, huge problems with them, whether it's being able to sign up for an account quickly, transfer your cash in, get your money out. So there's a lot of problems with those exchanges now. Hopefully those are fixed in the near future. Now, Ethereum on market share, Ethereum now has still, despite this correction, Ethereum still has over $100 billion market cap. It's gained a lot against Bitcoin. Do you think there's a lot of fundamentals to that because Ethereum, a lot more people are using it to actually transact?
I mean, like transact their CryptoKitties or whatever.
Well, I mean, it's become the ICO crypto, right?
Yeah, I mean, it definitely has network effects in that regard. And there's real volume with Ethereum. You know, you can buy and sell $5 or $10 million of that really easily in OTC deals. You know, like Kraken has an OTC desk and trades large blocks of Ethereum and some of these other places. So, I mean, yeah, there's real liquidity behind Ethereum, and is it justified fundamentally? I don't really think so. But never underestimate like how much capital might like to come in here. You know, people love this thought of getting rich quick, and we saw it with Pets.com and the internet bubble and the crypto bubble right now. I mean, we're like, you know, what people would call the crypto bubble. I don't think it's a bubble because these are equity-based assets that largely are not, you know, you can't get margin called on them if you're holding them the right way, where you hold the keys yourself. But, you know, we're $500 billion market cap for the whole industry. Like the internet tech bubble, when it finally hit its top, it was like 2.7 trillion. So we got a lot of room to move. And I think it could go even a whole lot higher than what the tech bubble did. Because one, we're just 15 years later, but two, it's just such a fun and interesting space, and there's opportunity to make gains in so many different ways than we had then.
I think there's an argument to be made that there's a bubble in a lot of these altcoins and the initial coin offerings. I mean, Tron, within a couple weeks of Tron announcement, they had a white paper out. They didn't even have a website. They couldn't do a Periscope right, and it had over a $10 billion valuation. So, I mean,
Well, yeah, I mean, distinguish between legitimate projects and like just scams, basically, you know, and we're starting to see the SEC crack down on a lot of these Ponzi scams and fraudulent securities offerings and stuff like that. So, like, I mean, this space is we got scammers running all over the place in here. But the scammers, notice what they're trying to do. They're trying to sell their asset to get Bitcoin, right?
Yep.
So why? So
or Ethereum,
like, yeah, or get Ethereum. So like, why give up your precious Bitcoin or Ether to these scammers? You know, just if people are gonna get suckered, you know, if they're gonna get suckered into these scams, like, it's not like people haven't been warning about it.
Exactly, I completely agree. We've seen in the news stories that there's been fraud in the ICO market. I think 10% of all initial coin offerings have been hacked. There was a large exchange hacked in Japan. I want to ask you though about the Lightning Network. So a lot of people who are still pro Bitcoin, who are buying this dip in the Bitcoin price, who still believe in the long-term advantages that Bitcoin has with its supply, its security, they're talking about the Lightning Network and its ability to maybe speed up and lower Bitcoin transaction costs. So for people who are not familiar with the Lightning Network, what is it?
Yeah, so the Lightning Network, you're able to open channels, and there will also be Lightning Hub. And so you can think of it like a caching layer for Bitcoin. It's where you're able to put a bunch of transactions and then you essentially net those transactions out into one transaction on the Bitcoin blockchain. And so you're able to have trustless instant, free, or extremely, extremely low fee transactions happening on the Lightning Network. And on mainnet right now, it's actually live. The Lightning developers have warned, like, oh, there could be bugs, you could lose your money, like play on testnet. But like Bitcoiners, we want to have fun. We want to buy like a sticker that says my other node is a satellite, or don't trust verified T-shirt from the Blockstream store. So we want to have fun playing on mainnet with some real money. And so there's now 3.8 Bitcoins in Lightning Network channels on mainnet, so that's over $50,000. And I think it's like 250 Lightning Network channels open, or hubs or something. I'd have to go look at all the metrics, but that network is starting to grow and people are starting to use it. And so this is going to be another layer on top of Bitcoin, another protocol layer on top of it, that's going to enable Bitcoin to be super fast, super cheap, trustless. So it's still using Bitcoin. There's no IOUs on this thing. Like that's just a flat out lie or misrepresentation of the facts, because this is trustless and cryptographically provable and trustless because of how you open the channels and you have commitments and everything in terms of at the technical layer. So this is, I think 2018, we could see Lightning Network pick up more usage, which will increase the second and third network effects of merchants and consumers. And then it'll be bolstered by the sixth network effect of financialization with CME futures options, so the merchants can hedge their exchange rate risk using the futures.
And so then that would prevent the wild swings from the merchants. Then they would have more predictable cash flows. With the Lightning Network, the way you explained it kind of reminds me of like a restaurant that has an app, and then they batch all their credit card transactions that you have if you go and eat lunch there, and they batch them all in 1 month, so they don't get overcharged by the credit card company per transaction. They get just one batch, and so they pay one flat fee. And so that's kind of how Bitcoin and the Lightning Network are envisioning things in the future. And the cost trace, how much of the cost would drop? Are we talking back to 1 cent or 2 cents per transaction again?
Oh, it would be fractions of a cent. And actually, you might even get negative fee on Lightning, because if you have to rebalance where the Bitcoins are at on different channels, you might actually have a negative fee. So you would get incentivized to move the Bitcoins from like one channel over to a different channel. So like, this Lightning Network is going to be a big deal for increasing the scalability of Bitcoin.
And do you think then probably in 6 months or 12 months they're going to work out more of the bugs and it's going to be a lot wider mass adoption, or do you think they're going to go very slow and this is going to take another couple of years?
Well, I mean, what are we seeing? We're seeing a lot of the Bitcoiners are actually putting their money into Lightning Network channels saying, hey, I want to have some fun testing the latest, newest technology. And so, they're helping find the bug, right? And they're willing to put their money there in order to help find the bugs. And so I think we're going to see the development happen much faster than we saw other layers of the internet get built out, because we have this profit incentive and this motive to do so with Lightning that we didn't have when we were building out like HTTP or some of the other protocols on top of TCP/IP, etc.
That's very interesting. Now, I've also heard a lot of Bitcoin proponents that are still long Bitcoin, accumulating Bitcoin, still believing in Bitcoin. They're talking about the benefits of atomic swaps. So what are atomic swaps then?
Atomic swaps are where you would have, you would be able to trade your Bitcoin for your Litecoin trustlessly. And segregated witness has, helped make this easier to do at the protocol level. And so we could see all types of stuff like decentralized exchanges, or we could even have decentralized exchanges between different coins in Lightning Network, right? So in terms of the fungibility and the privacy, because how the developers have been building the Lightning Network, they're using the onion routing, kind of like Tor. And so we could these cross-blockchain atomic swaps, Lightning networks, decentralized exchanges, this could all be, very interesting technology getting rolled out and deployed in in 2018.
That's very interesting. So with an atomic swap, then, for our listeners, because you use a lot of technical terms there, basically it would be that people could transact peer-to-peer with cryptocurrency without the need for an exchange. So I wouldn't have to go to Coinbase or another one of those exchanges then to send cryptocurrency.
Exactly, and you'd be trading Bitcoin for Litecoin, right?
Sure.
In a trustless way with this cross-blockchain atomic swap, and so that's kind of a big deal, especially if you can do it with a lot more fungibility and anonymity because of the onion routing in a Lightning network.
Yeah, I agree. And the people who are criticizing Bitcoin, the people who are criticizing it are saying that the costs are too high, it takes too long now to confirm a transaction. And so do you think then, it sounds like you think this is way overblown, the criticism?
Yeah, I mean, like, compared to what? Like, where's the alternative? And pretty much all the alternatives out there, they've used the Bitcoin Core software code. So, I mean, if the code is not any good, then why are they using it? And sure, like, there's a lot of stuff we would like to build out with Bitcoin, but it takes time to write code. Code doesn't just write itself, you know? So, like, any of the criticisms that are there, I think in a lot of cases they're just they're either misinformation or disinformation and just outright lies, or it's just, it would be nice if we got 20 years of development done in 2 weeks, but that's just not how, like, safe, conservative, methodical, thoughtful development happens. Like, software code doesn't just write itself and have no bugs, like, you have to go through the process.
I'm not sure if you've noticed this, but a lot of the people who bash Bitcoin now are trying to sell another cryptocurrency. So they've either started their own cryptocurrency, or they put a lot of their money, profits that they've made off of Bitcoin in the past, they put it into another cryptocurrency like Bitcoin Cash.
Right. Well, that's what I'm saying. But they're the cryptocurrency that they want to sell or whatever, they're using the Bitcoin Core software. So it's like, why is your coin better than Bitcoin if you're using the Bitcoin Core software as the base for your coin?
Yeah, they're just claiming it's going to be cheaper to transact, but if the Lightning Network does go through, I really don't see a point to the other altcoins.
Well, I mean, people make claims all the time, like, prove it, like, if your code, and it's also, Bitcoin Cash is an interesting example, because if your fork is so good, why would you even want to have Bitcoin in your name? I mean, that's just shows so much weakness. It shows that you don't even have confidence in your own project. Like, if you fork the automobile, right,
mm-hmm.
and you now have a Ferrari, you don't want to be known as a Ford Plus. You want to be known as a Ferrari. You don't want anything to do with the Ford name because you want your Ferrari, because your Ferrari is so much more superior than the Ford that you would not want it to be confusingly similar that your Ferrari is a Ford. So just using the name Bitcoin in the name of any of these forks, whether it's Bitcoin Cash or Bitcoin Gold or Bitcoin Diamond or Bitcoin X or Bitcoin Dark or whatever, like, just using the name connotes that you have no faith or confidence in your own coin, in the developer team behind your coin, and it seems like such a very weak position to take. Like, just, there's no strength there.
That's an interesting point you brought up about the marketing. It sounds like they're just trying to ride Bitcoin's coattails rather than actually try to make a separate product.
Well, that's what you would do if you have an inferior product, right? You would want to make it confusingly similar to a much stronger, better product instead of totally differentiating yourself from that product. I mean, nobody like, if you're the cheap Chinese knockoff, yeah, you want to make your, you want to put the label of something else on your cheap Chinese knockoff, because otherwise you got a really weak.
You can fool people. Yeah.
Yeah, you've got a really weak, poor product. And so, yeah, I mean, if your product's so good, like, why would you even want to be associated with Bitcoin at all in any way? I mean,
that's a good point. Like
Ferrari, Lamborghini, Mercedes, they do not want to be mistaken for a Ford or some other piece of junk car.
Excellent point. And Dash and Monero, that's what they decided to do. I mean, Dash is digital cash, right? So they didn't name it Bitcoin Cash. They didn't take the name already, so.
Well, yeah, and I'm not saying that Dash or, like, any of these other projects that have tried to do their own branding, I'm not saying that makes them a better project or that they have a better developer team or anything, but you have to at least look at it and be like, hey, at least the developers and the people behind that project have some confidence in their own abilities, right? and they don't think that they don't lack this self-confidence and think that they're weak on the development side, that they need to rely instead on trying to pass their cheap Chinese knockoff off as something else.
Yeah, I agree. I want to ask you now about Bitcoin Cash. Bitcoin Cash is not decentralized, correct?
I mean, it's fork of the Bitcoin network. So like but there are actually more Lightning Network nodes on the Bitcoin on Bitcoin than there are total Bitcoin Cash nodes. So like, and a lot of these Bitcoin Cash nodes, from what I understand, run on Alibaba servers. So how decentralized really is the Bitcoin Cash network? I mean, we had over 160,000 nodes that have connected to the Bitcoin network, the mainnet, in the last 30 days. So yeah, I mean, it has a lot of the same potential as the Bitcoin network in terms of its decentralization, because it's just a fork of the code in a lot of ways, with some changes to it. But at the same time, like, where's the deployed node infrastructure? It's just not there. So I mean, if you only got a couple substantive economic nodes running at Coinbase and Bitfinex and Kraken and whatever, and no actual users are running the nodes, then yeah, I don't know how decentralized it is.
Now I want to transition to the cost to mining Bitcoin. I've heard from my contacts that they keep rising. I believe about a year ago it was around $1,000 to mine a Bitcoin, and now I think I heard $3,500 to mine a Bitcoin. So do you expect the cost to ever fall to mine Bitcoin, or do you expect it to be like gold then, where every few years or every 10 years the costs are just going to be much, much higher to mine it profitably at a commercial scale?
Well, yeah, I mean, mining is, not only are you betting on the exchange rate of Bitcoin, but you're also betting on the variance in the difficulty. And so right now it's currently very profitable to mine Bitcoins, and we'll probably continue to see that, but it's also, we don't necessarily know what the costs are to mine Bitcoin, because maybe you get paid to use the electricity, right? And so one of what might be a large variable cost for one operator could actually be a source of revenue for another operator. And then we've also got the hardware, and I think we're going to see more advances getting rolled out in terms of the ASICs. So that there might have to be a whole new refreshment of a lot of the Bitcoin mining hardware in order to continue mining efficiently. So, I mean, long story, I suppose, long answer to a very complicated question is, it'll be profitable to mine Bitcoin for a while still.
And in Venezuela, where the socialist government subsidizes electricity and it's only 1 or 2 cents, like you said, it's basically they can use almost as much electricity as they want and still mine Bitcoin profitably. I think that's how people are doing it right now to survive. So they've resorted to mining cryptocurrency. I even heard a funny story how like Venezuelan Secret Service agents, like secret police, they stole Bitcoin mining operations and they're running it themselves after they stole it from people.
Yeah, that's what governments do, right? But I mean, this raises a larger issue, which has to do with the governmental interference that has happened in the electricity markets, because the utilities and electrical companies are very highly regulated, and in a lot of cases they're capped in terms of like what they can charge customers and stuff like this. And now Germany has misallocated $100 billion into solar projects, and so electricity prices are negative in Germany, or they had hit negative like a couple weeks ago. I put a tweet out about it. And so Bitcoin is going to help make the power markets much more efficient, because if you have a surplus in one area, you can turn it into Bitcoin, and then you can buy power in a different location. So hopefully we'll see a lot more efficiency come to the power markets, and it'll be interesting to see how that plays out given all of the significant amount of government regulation that has caused misallocations of capital in that particular industry. And owning Bitcoin might become a hedge against increased electricity costs. So, you might want to own some Bitcoin just so you can buy some power in the future.
And water utilities are even worse than electrical utilities. But you talked about Bitcoin as a hedge. Recently, you've also talked about Bitcoin could potentially become a reserve asset or reserve currency, and central banks will buy it. Why do you think central banks would start accumulating Bitcoin?
Well, if there's enough depth and liquidity in the Bitcoin market, and it's a non-correlated asset, and it acts like gold, and we have financial instruments that are starting to get used and rolled out with it, then it would make sense for all those reasons plus quite a bit more. There's actually a paper, a 96-page paper from the Central Bank of Canada about what a Bitcoin standard would look like if instead of a gold standard, a Bitcoin standard. And there was also a paper from the Central Bank of, I think, Antigua about central banks using Bitcoin as a reserve asset. And so, with the huge rise in the Bitcoin price and the potential for the rise in the Bitcoin price, whichever central banks adopt Bitcoin first, if there is a massive increase in the Bitcoin price, having those Bitcoins could be like having large oil deposits. It could be, the balance sheet of those central banks could just balloon in terms of the assets versus the liabilities. So it could provide a lot of strength to their fiat currencies. So, it's going to be very interesting. I think that the central banks might start dipping their toe in 2018, accumulating some Bitcoin just to have some. But they'll do it very quietly, I think. No reason to tell everyone they're doing it.
Do you think there would be windfall profits taxes then if the central banks are buying it? Do you think they'd try to go after the regular citizens with windfall profits taxes on crypto while they buy it themselves and don't charge themselves any taxes?
The legislatures would be the ones usually that would be introducing the tax laws, and then the executive branches usually are the ones that have to sign those laws into force. And so it's not like the central banks are going to be promulgating tax like policy and law. But yeah, that's kind of how, we already have capital gains taxes in most countries on Bitcoin. So, we already have these windfall taxes in place. It'll be interesting to see whether it will be efficient to actually collect the taxes, especially with things like Lightning Network and the onion routing and cross-blockchain atomic swaps and MAST and all this stuff. Like it might get to the point where it's becomes so difficult to calculate or actually see what income is because there are no third parties, right? If you're using Bitcoin strictly peer-to-peer, that it might make more sense for the governments to shift more towards a VAT or a consumption tax type of regime instead of an income tax regime.
I would prefer no income tax, because taxation is theft, and I know you believe that too.
Yeah, they strut around in their costumes and as a criminal gang, trying to extort people. But the issue is whether they can actually profitably extort people or not. And the asymmetric encryption has lowered the cost to secure protection. And so the return on investment from engaging in extortion has gone down. And so it's like the business model that a lot of these governments have is just not very feasible given the changes in technology. So they need to change their business model if they want to continue to be able to extract resources from the underlying economy.
And I think, governments I don't think they want to totally eliminate all the cryptocurrencies. I think they just want to tax and regulate it right now. And last week at Davos, from what I heard, the word blockchain appeared more in the Davos program than the words Europe or the United States. And also the word blockchain was the second most uttered theme after the word Trump. So, the word Bitcoin wasn't mentioned, but people in Davos, the economic and political elites that try to, top-down plan everything, they were mentioning the word blockchain. So that worries me as a libertarian, someone who wants freedom, less taxes, that we have the Bank of International Settlements with the WorldCoin. All these central banks are testing out blockchain to try to issue like a government centralized cryptocurrency and ban cash.
Yeah, but isn't it interesting? Well, one is like, why trust that coin, right? We already got that coin. It's an altcoin that's pre-mined. We don't know the distribution schedule. The the code is closed source. Like, why trust that coin?
No one would trust it, though.
Yeah.
So you're a lawyer. You know all about legal tender laws, right? So.
Well, yeah, but that forces you to take it in exchange for debt. Well, you just don't extend anybody debt, right? So, but I do find it interesting that you're talking about the two prominent topics among the quote-unquote establishment is Trump and blockchain. And Trump, not part of the establishment, definitely fighting against it. And what has happened during Trump's administration regarding Bitcoin and blockchain technology? Well, we've had the law passed in Nevada with no taxes, permits, regulations, or licenses. We've had a tax law, a blockchain law passed in Wyoming. We've had several members of Trump's administration are very pro-Bitcoin, like Budget Director Mulvaney and several others, and the CFTC has approved the CME futures. So it appears that the Trump administration so far has been very pro-Bitcoin, at least in their actual actions, if not in any word. And so it remains to be seen how much more we see happen out of Washington with regards to this. But it could actually be very advantageous for Trump to enable Bitcoin and let a massive bubble happen for Main Street. Give Main Street the money, not Wall Street and the political establishment. Transfer the wealth from them to Main Street, and that would boost the economy, which is already rocking and rolling under Trump, and everybody would be making a ton of money, so Trump would probably get reelected. And so it's going to be very interesting to see how all of this takes place, because the establishment is definitely they're on guard. I mean, if they're so worried about blockchain, why? Because when Martin Luther King, the marches and stuff, they had their effect, but where it really hurt was the boycotts during the civil rights movement. It's when you attack the money and the money flows. And so I think we're going to see the same type of thing. If you want to vote against the establishment, hold gold and Bitcoin, because then you're fighting every central bank in the world. You want monetary sovereignty, claim it, prove it. Take it with Bitcoin. Hold your own private keys. Run your own full node. Use the Armory software that I funded. That is the tool that enables you to take up your monetary rights and your monetary sovereignty. So right now, if people aren't claiming their monetary sovereignty, it's because they don't want it bad enough. Because the tool is now there. Is now out there for people to claim it. And so you're either going to claim it, or you're going to probably have your assets confiscated through inflation, taxed, bailed out, and all types of stuff, to just evaporate away. So, it's going to be very interesting this next decade.
Yeah, I think the elites want to hijack the technology behind Bitcoin and the other cryptocurrencies and use it for nefarious purposes for their cashless society. They want to use blockchain for, cashless society, track and tax every transaction. If you're a rabble-rouser like Julian Assange or Edward Snowden, they can shut off your bank account or your credit card account very quickly. Then on top of this, Trace, I'm not sure if you saw this, but there's these Marxist university professors that are saying that math is racist and Bitcoin is racist. Is totally ridiculous, because anyone could have won out there. The largest cryptocurrency and Bitcoin trading volume was in Asia, so they're saying it like it was white people that are the only ones buying Bitcoin. Totally ridiculous stuff that comes out of these people's mouths. I think even today they said that yoga is racist. And
well, yeah, I mean, at the end of the day, how do these university professors even get funded, right? And notice in the Trump tax bill that got passed, they're specifically going to be going after a lot of the endowments of these very large universities. And so, I think that we're going to, and it's not like these college degrees are even very useful for the people getting them anyways. So, it's just all part of the change of the social order that happens during a fourth turning. And we've got 10 years left in this fourth turning, and, we get to vote with our money. And so, and that really is the vote that matters the most, is how you allocate your capital and allocate your money. And freedom is getting much more profitable to vote on.
I agree. You can vote with your money and vote with your feet. That's the real votes now. A lot of these elections are rigged or manipulated, and almost all the mainstream media news is fake news now, or totally slanted with political hacks and op-eds pretending to be objective journalism. You're not worried though about these Bitcoin futures contracts that are being implemented implemented that they'll cap the price and manipulate the markets down with high frequency trading algorithms like what's happened with gold and silver markets?
Oh, I mean, like if they try to manipulate the price down, then people will just acquire more satoshis. They'll take more territory on the Bitcoin blockchain because you have to deliver the satoshis. Unlike gold, where we have lots of paper gold and you have to melt down a bar and reassay it. With Bitcoin, it's over $20 billion a day gets melted down and recast into new Bitcoin. Like, you have to deliver it on the blockchain all the time. So Bitcoin is, the same way of trying to manipulate the Bitcoin price that they did with gold and silver. And, and I followed a lot of GATA's work. And I'm a consultant to GATA. That same strategy or playbook will backfire if they try it with Bitcoin. Like, it just won't. Not only will it not be effective, but it'll actually be counterproductive.
We'll be right back with Trace Mayer after a word from our sponsor.
Do you work out routinely and eat healthy almost all the time? If you eat paleo or vegan or work out routinely, you may be eligible to save up to 33% off on your life insurance thanks to Health IQ. Health IQ is a venture capital-backed, big data technology life insurance company that offers customers life insurance at special rates by using the latest technologies. For more information, please go to healthiq.com/WS4MS. That's healthiq.com/WS4MS. What I could see happening, because Bitcoin has the halving, right? So then it's going to become harder for the miners to prove the work, and they're going to have to solve harder problems, and they're going to earn less Bitcoin, and that's probably going to force cost to mine Bitcoin higher. And if the miners can't make a profit, then they're going to stop mining Bitcoin. So the price is going to have to go higher. So I kind of see that as a counterbalancing force then to the potential Bitcoin manipulation if they're trying to do it the same way as gold and silver.
Yeah, I mean, one is we've been through quite a few halvings already, and Bitcoin network has not been disrupted in any way. So, I think that has already been priced into the current price of Bitcoin, because everybody's doing economic calculation and bidding on the price of Bitcoin 24 hours a day, 7 days a week, 365 days a year. And the Bitcoin blockchain moves along with a new block every 10 minutes, melting down and recasting new Bitcoins, and there's 100% audit in terms of the quantity and the quality of those Bitcoins. So there's no paper Bitcoin on the blockchain. There might be a lot of paper Bitcoin at Coinbase or at some other exchange, right? But that's why you run a full node and hold your own private keys, because you're like, oh, you owe me Bitcoin? Yeah, send them to this address. You don't, you have Bitcoin? Prove it. Send them to me. Right? It's much more difficult to do that with gold and silver because you have all these fabrication and transactional costs involved in actually verifying the quantity and the quality of the gold. Plus, you don't have a lot of the cash market like you do with Bitcoin. That people are buying and selling it for cash and using it all the time and lots of transactions, and with Lightning Network, that's going to speed up even faster the velocity of the Bitcoin. So if you're not delivering the physical, if you're trying to suppress the price like they did with gold and silver, I mean, it's just going to be totally counterproductive for them, and they're gonna lose territory on the Bitcoin blockchain. They're going to lose satoshis doing it.
So it'll be very expensive then for them to do the manipulation. It won't be easy for them to do it like they do it on the futures markets now with their fiat then.
Yeah, well, exactly, because we're at this interesting point in history where the world is rethinking what money is. What is money, and what is the asset with the lowest risk profile? And so that becomes the risk-free asset or the risk-free rate when you're doing calculation. And so is it dollar, is it gold, or is it Bitcoin, or is it something else, right? And so if you're going to try to maintain an inferior, if you're betting wrong on that answer, so say you bet on dollars and you're shorting Bitcoin, but Bitcoin's the actual answer, guess what? You're going to take losses. There are going to be significant economic losses imposed for that incorrect economic calculation. This is a game of keep. This is the ultimate game of keeps, because money is either gold, which is limited in amount and extensible, or it's dollars, which is extensible but not limited in amount, or perhaps it's going to be Bitcoin, which is both limited in amount and extensible. So which one's going to be able to outcompete the others and become that risk-free asset? And Bitcoin, it can be divided up with math, and so it doesn't have to exist at a single point in place in time like gold does, because gold's an atom or an element. So, and I think this might be one of the reasons the volatility in the price of Bitcoin is so high, is because there are just such widely divergent views on Bitcoin and its what it is and what it can become and the probability of that happening. There's just so much uncertainty, and there's so much asymmetric knowledge and information, and so everybody's doing their own economic calculation. And this is the largest wealth transfer ever in the history of the world, and the people that calculate correctly economically, they're going to profit, and the people that don't, they're going to suffer losses. And this is a game of keeps. And so if you're going to if they think that they're going to suppress the price of Bitcoin, all that does is enable people to acquire more Bitcoin at a lower cost. And if Bitcoin ultimately becomes that asset, then suppressing that price just eroded your own position financially.
So I think you've just laid out the argument how Bitcoin's kind of a geopolitical weapon then against the elite.
Yeah, which, I did that interview with Epoch Times. People might want to go watch that because, it goes much more into depth into this and how it all works and plays out. And yeah, this is a massive geopolitical and geostrategic chessboard, and we're in currency wars right now, and it's a currency war not just between dollars and rubles or dollars and yuan, but it's also a currency war between the individual and the institution of the state, because individuals can now claim their monetary sovereignty on the Bitcoin blockchain by taking Satoshis there, right? So we are in just absolute chaos when you think about it, and it will all shake itself out, and eventually, and it might take 10, 20 years for that to happen as the technology gets rolled out and deployed and built and everything. But the winners and the losers, man, it's going to be a real game of keeps.
Now, some of my listeners have a lot of their net worth in Bitcoin. Do you think a Trezor storage device is a sound way to store your Bitcoin offline?
I talk about this often. If you want, the safest, the most conservative, the best option in terms of security, then you would run a full node using Bitcoin Core software. You would use Armory Wallet on something like the Purism laptop, PURI.SM, on a laptop, on a general purpose computer, not a specific Bitcoin device like a Trezor or a Ledger. And then you would follow something like the Glacier Protocol, glacierprotocol.org. And so those are your 4 steps. If you want to keep your Bitcoins in the best, safest, most secure way, and understand the different attack vectors and threats and surfaces and everything, you read through the Glacier Protocol. You don't necessarily have to implement all of it, but, read through. It's 95 pages. This is not like claiming your monetary sovereignty. If you have $100 of Bitcoin, fine, put $100 of thought into securing it. But if you want to, if you have real money in Bitcoin and you really want to secure it, then you need to put some real effort and work into figuring out how to do that. And so those would be the 4 steps that I would recommend people follow. And anything else is inferior to that, at least as far as I understand all the best practices and technology in the space.
Okay, that's very interesting. I'm not an expert on this, but a lot of my friends who have significant net worth in cryptocurrency, they own at least 1 or 2 Trezors. So I was going to ask you.
I'm not saying that Trezors aren't good, right? But they're not the best. There's good, better, and best. If you want the absolute best in terms of security, I just laid out the 4 steps. That's the best.
I think Gold Money now also has multi-layer security too as well. They charge a storage fee though. So they have in addition.
But why deal with a third party that can be subpoenaed and freeze your money and not let you withdraw it or whatever? It's just that kind of defeats the purpose.
Well, maybe they'll maybe crypto profits will recapitalize the banking system. You said they might recapitalize governments and the central banks. We'll have to see in the future. I think one of the main reasons that the South Korean government shut down their crypto exchanges was because people hadn't reported their identities, so they couldn't get taxed to pay their capital gains taxes.
Well, when you say recapitalize, why even let these institutions continue? It's better to just let them fail for cash flow reasons and have new institutions created and built.
Well, I agree. I would love to have seen real bankruptcies during the 2008 financial crisis, but you and me don't have large votes here. So the people.
But now we're getting a larger vote because hey, there's only so much territory on the Bitcoin blockchain. So if we're going to do bailouts and monetize the debt, because interest rates go up on $20 trillion of debt, which increases the budget deficit. Like, why would people want to hold dollars, and why would people want to hold dollar-denominated debt, which there's hundreds of trillions of dollars of dollar and euro-denominated debt? And if we're going to have competitive devaluations, like, why hold that stuff?
I don't think anyone would do it voluntarily. I think that's why governments have legal tender laws, and that's why governments have guns, right? So, and that's why they have tax.
But I mean, we're talking about pensions, and I mean, there's $90.4 trillion of like broad money supply with all the different currencies. Like, it's because people haven't really done, they just aren't voting largely yet to move into something limited in amount that's censorship resistant and immutable and portable.
Well, I also think there's also a lot of people like my dad who are not very technologically savvy, so it's not quite easy yet for them to do it. Like, they don't even want to, my dad doesn't even want to sign up for a Coinbase account because he doesn't want to attach his bank account number. So maybe there'll be a solution in the future where he doesn't even have to use an exchange and it'll be even easier.
Well, yeah, the first rule of panic is to do it first. There are only so many boats only so many seats in the life raft, right? And Bitcoin is increasingly rewarding the people who do it early and develop their technological literacy and savvy. We see it with claiming the Bitcoin forks and all types of different stuff.
Well, Trace, despite the Bitcoin price hovering around $10,000 per coin right now, there's actually a lot of bets from bookies. People are betting on bookie websites that they think 2018 Bitcoin will actually end higher. So this is kind of a buy the dip mentality still, despite the nasty correction. So despite the mainstream media journalists that are asking you if Bitcoin died all the time.
Yeah, I mean, there was that time that Bitcoin crashed, and then that other time Bitcoin crashed. I mean, like... And then there's the Bitcoin obituary website. Like, Bitcoin's died like 300 times now. Like, no, Bitcoin is stronger than ever. In terms of the fundamentals, we've had segregated witness and lightning. We have things like masked, Merkleized, abstract syntax trees. We have Schnorr signatures on the horizon, signature aggregation. So in terms of the fundamentals, it's huge. In terms of the technicals, the 200-day moving average has never been higher, close to $7,700 right now for the 200-day moving average. So, and that puts us at a 1.3x the relative price, the current price divided by 200-day moving average. Someone built this website, MayerMultiple.com, that totally unbeknownst to me, but it kind of, I've talked about that ratio quite a bit in different interviews. And I mean, Bitcoin has never been healthier. And yeah, I mean, we're in a correction and consolidation phase. And when you want to buy something, you want to buy it when it's undervalued. You want to buy it when it's cheap, not when it's expensive. And this 1.3x on the Mayer multiple ratio, Bitcoin's getting cheap relative to its history over the last few years. So, yeah, I mean, like, people are going to make their own economic calculation, and those who do correctly are going to have profits.
Yeah, a lot of people like cryptocurrencies now are not bullish on Bitcoin anymore. I think that a lot of the problems that people are claiming about Bitcoin are overblown, especially if Litecoin Network works out. And so, judging by your passion, then, I don't think you're buying any altcoins. Then you don't own any altcoins. You're a Bitcoin guy, and you're sticking with it.
Well, I mean, with all these Bitcoin forks, we all own a bajillion altcoins. We have Bitcoin Cash, we have Bcash, we have Bitcoin Gold, we have Bitcoin Faith, we have Bitcoin Gold, we have Bitcore, we have Gigabytes, Gbytes, we have Stellar, we have Bitcore, we have Bitcoin X, we have Bitcoin Faith, we have Bitcoin Lightning, we have Bitcoin Hot, we have Bitcoin World, we have Bitcoin X. And these are all forks where if you own Bitcoins and hold the private keys yourself, you can access them and start selling them immediately, right? So but are any of these altcoins and forks going to pose any type of threat to Bitcoin's dominance in terms of these 7 network effects? No, I don't think so, not at all. And it's very easy for people to create forks. Like, one of my friends, they created a website, forkgen.tech. So now it's super easy to create a fork of Bitcoin. So I think we're going to see a lot more forks in 2018 because it helps increase the misinformation and disinformation and asymmetric knowledge, which gives the miners and the exchanges that are doing these forks a more competitive advantage. in performing that economic calculation. So I think we're going to continue to see, increases in that type of stuff to just make it harder to assess what the actual environment and state is for everything.
It also sounds like a full-time job, Trace, trying to research all these different altcoins. You just mentioned over a dozen of them. You just rolled them right off, and there's so many of them. There's many hundreds of different ones, it seems. And when the cryptocurrency prices were going bonkers a month or two ago, there was even a dozen of them in a week. There was new ones. So all these YouTube pumper channels were coming up with them. It was just getting crazy that these YouTube channels were just coming out of the works naming altcoins I had never even heard of, and they were going up like crazy in price.
Yeah, but I mean, the ones I named, these are all forks that you get free if you hold the private keys of your Bitcoin. So you could go sell your Bitcoin Gold for $180 per Bitcoin. You could get $40 per Bitcoin for your Bitcoin Diamond. You could get $80 for your super Bitcoin. You could get 10,000 Bitcoin X's per Bitcoin, and they sell for like 2 cents a piece. So it's something like $25 for Bitcoin X per Bitcoin that you hold. So this is like all free money that you can run around and collect, kind of like Mario.
Very cool. I'm really interested in learning about this space. I think we're in a very interesting time in history because all these central banks are doing a lot of crazy stuff. I mean, China's basically created the fastest credit bubble in history in the last 10 years. Their government balance sheet was better before they started the stimulus in 2009. And I think a lot of people in China are worried about a devaluation, and that's why cryptocurrency is so popular there.
Yeah, I mean, well, in this currency war, that's the name of the game and how it'll play out, competitive devaluation, right? And so everybody wants to devalue so that they can increase their exports. And so, why hold their currency and why hold debt denominated in that currency? It's government policy that they're going to devalue it. So you got to move into something else. Might as well get something limited in amount, censorship resistant, portable, liquid. Sounds good to me.
Yeah, I think owning some cryptocurrency is a very important diversification part of people's portfolio now. Obviously, if I was working in the regular financial industry, no one's going to say that. You won't hear someone going on CNBC or Bloomberg who's in the regular financial industry and already making a lot of money saying that people should diversify into crypto.
Well, not a lot of fees to be made from doing that.
Exactly. So no ETF fees, no stock mutual fund fees, no active manager fees, no bond fund fees, none of that.
Yeah, I mean, just disintermediate all of that. Why pay these people?
Well, I think that's part of the problem is that people trust the wrong sources of information. So a lot of people still pay attention to these guys. Yes, their ratings are down, but I mean, they still have a platform to go and do that.
Well, that's where, we now have the ability to claim our monetary sovereignty with Bitcoin. And so totally claim it. And so if people... now it's just a game of economic calculation, and you're either going to calculate correctly or you're not, and you're either going to have profits or you're going to have losses, and this is a game of keeps. So hey, if you want to pay attention and listen to the guy who's trying to sell you on his fee loaded mutual fund or whatever, good luck with that.
Well, Trace, I want to thank you again for your time today. If our listeners want to follow more of your work and listen to the Bitcoin Knowledge Podcast, how did they do so?
Yeah, so they can go to www.bitcoin.kn for the Bitcoin Knowledge Podcast, and then on Twitter it's just @TraceMayer. So that's where they can kind of hone in and see the latest stuff I'm talking about or having fun with on Twitter, right?
Yeah, I mean, you've been calling out Jamie Dimon and Warren Buffett and some of the other guys on Wall Street. It's kind of funny. You get in Twitter wars with them.
Yeah, and actually, I called out some scammers in the Bitcoin space. One of the most popular books on Amazon by the Tapscott father and son team. They actually engaged in a massive fraud up in Canada, claiming people as advisors on their fund that weren't advisors, and they had to send back all the money that they had raised. And so I think it's important for people to call out scammers like this in the space too. So yeah, you got to kind of be fearless about that.
That's very interesting. I mean, there's so much money flowing into this space that I guess there's a lot of temptation, whether it's a speculator or someone trying to create a fake ICO. I mean, there's just so many frauds. I've heard of people who are experienced as you getting defrauded on ICOs. So, and then you have the people trying to get rich quick, like I said, the speculators who have fear of missing out. And what worries me is people were taking out, they were using credit cards to go and speculate, and it's probably money they can't afford to lose.
Yeah, at the end of the day, there is a lot of noise and not a lot of signal. And I really feel bad for a lot of the people who, for whatever reason, haven't been in this space for a while and haven't developed the human capital, because, man, it is just shark infested. There's tons of scammers and ICO pumps and forks and misinformation and lies and all this stuff. And so there's just so much noise, not a lot of signal. And you have to really trust the different voices that you're going to listen to. You need to be really careful about that.
Exactly. And the talking heads on CNBC and Bloomberg are saying not to own any cryptocurrency at all, which I think has been, especially the last 7 years, a big mistake.
Oh, yeah. Like, that's worked out great for them, right? they get to buy it cheap.
They're already rich, right? So a lot of them are already making 6 or 7 figures a year off the status quo, so they don't need to sell something different.
Right. Yeah. And, maybe they want to buy it cheaper. Like Jamie Dimon talks about Bitcoin being a fraud, and at the same time, JP Morgan is buying Bitcoin on the Swedish exchange with one of the ETNs. So.
Oh, really?
Yeah, and there was an official complaint filed with the regulator over there. So, wow. I mean, like...
They also gave Blythe Masters like $20 or $30 million to start her own blockchain company a few years ago, and she was on the cover of Bloomberg for that, too. So, I mean, it's hypocritical.
Right. So, a lot of noise, not a lot of signal. Be very careful about who you follow and who you trust. Do your own due diligence. Hold your own private keys. Claim your monetary sovereignty. It really shouldn't be that complicated.
And there's so many current events and news stories that have come into the Bitcoin market because governments are constantly changing the rules. They're trying to tax and regulate this thing. I don't think they'll be able to kill it, like I said, but they do want to try to hijack the blockchain technology. So we're going to have a lot of exciting current events and news stories going forward probably every couple months. And hopefully Tracy will continue to come on every 3 or 4 months and give us updates.
Oh, yeah. Love to keep doing that with you. And it's been a really good interview. Thanks for having me.